Well, hello and welcome to Bloomberg Quint. We are joined by the management of Greenlam Industries after they came out with their second quarter results. We are speaking with Mr. Saurabh Mittal, who is the Managing Director and Chief Executive Officer at the company. Saurabh, thank you so much, first of all, for taking the time out and speaking to us. Well, it has been a strong quarter for the company. We've seen a strong 10% growth when it comes to your top line. Your margins too have seen a healthy expansion on a year-on-year basis. Net profit has been aided partly on account of the shift to the lower tax regime. I'll start first with asking you about what has been the average realization per sheet for when it comes to your laminates and decorative allied products business.
So laminates, the average realization has been about 803 rupees. And on the growth front in laminates, the export growth has been about 15%, while domestic growth has largely been flattish. So the strong 10% growth you mentioned largely comes from export laminates and the new categories, new product categories of engineered wooden flooring and engineered wooden doors. So these businesses have contributed to higher growth, which have resulted in a 10%, near 10% top line growth.
Sure. Sort of also, I was going through one of the brokerage reports which highlights the fact that for yet another quarter, we've had a disappointment come in as far as the volumes is concerned. And this was mainly on account of the slowdown in the domestic business. Now, this might not just be limited to your particular company, because we've seen overall the real estate space being in a severe downtrend for some period of time now. How are things shaping up and how is business looking like as far as the current quarter is concerned? Has the festive season been a positive for the company?
So firstly, let me respond to your muted domestic growth. So if you look at the domestic business, there has been a volume growth, like I said, in the newer categories of flooring and doors. And there's been a marginal volume growth in the veneer business. The domestic laminate space has largely been flattish. And as you rightly mentioned, we are proxy to the real estate industry, and by and large, construction and interiors of, at least in the residential space, has been quite challenging. And as far as this quarter, this particular month goes, obviously October is, if both the festivals have come in 1 month, it normally is a difficult month. So we'll have to see the coming 2 months and how business performs. But we'll actually remain confident, with the new products and the continuous push towards expanding network and working with influencers, to increase our business in the future.
So, one of the subset of the overall building material space is your paints as well as the piping and piping solutions business. These two segments, they for some reason have managed to beat the slowdown. Paints, we see most of these companies, they've managed to report double-digit volume growth for several quarters now. The piping industry, we've seen companies like Supreme Industry, Astral Poly, they have reported strong volume growth as well. Now, what is it that you think that the industry needs to do, or what is it that the steps that the government needs to do in order to support the industry? Because we've seen the real estate business be under severe pressure for quite a long time now, and that is hampering your business because of the higher exposure of the retail segment. Going forward, if this pain were to continue, then how long do you see this pain to continue? And secondly, what are the steps that you think that the government needs to take, or a change in your strategy probably, in order to revive earnings again?
So if you see our numbers, despite the difficult real estate conditions over the last couple of years, we have grown each year in revenues. Our EBITDA has grown, our profit after tax has grown, our return ratios have improved, our debtors periods, our working capital discipline, has been there, and most of our balance sheet ratios have improved. So I would say, as far as we are concerned, in terms of a strategy of continuously adding new products, improving service, working with specifiers. The commercial part of the business is doing very well. The projects, the office space, so we have a significant exposure to the commercial space of the market, not just residential. We've also added new products which have been import substitutes. So if you look at the data for the last couple of years, so despite the challenges, business has grown each year. And not just in revenues, and it's across parameters of profitability and balance sheet. So I think we continue, to work on that path. And so really, from our perspective, there are opportunities, of converting the unorganized market to the organized market. There are opportunities of promoting newer products. There's still penetration gaps in the business. So I think we continue, in that direction. Our capital expenditure plans have been going on, as usual. We expanded capacity last month. So all that is intact. As far as what the government needs to do, I'm sure they know more than us. So we have a far more micro view about our business, our industry, and what's happening on ground. And I think some steps are being taken. And I think it's a matter of time, and things should, come back to, normalcy or, growth. Yeah, if that's what you want to ask.
Okay. The reason actually I asked this is because we just had an announcement come in yesterday from the finance minister with respect to setting up a dedicated fund for the affordable housing segment and steps like these which are supposed to help revive the housing sector space. But moving on, that apart, we've seen the realization in the veneer business that has fallen. So I'm looking at your press release which says that in the domestic veneer business, we've seen the realizations go down by about 6%.
Sure. Yes.
And we've seen that trend continue for quite a few quarters now. What is your strategy over there, and how do you look to, improve on this?
So clearly, there's been I would say, realization erosion on the veneer business, largely because residential market is weak, and veneer is a large, it's a product largely for the residential space. So the sales of value-added category, which literally goes to premium residential market, has slowed down, and we have seen more, sales of, lower price category, which is driving more volumes, but the per square meter realization or per sheet realization has slipped. It's more of, the buying behavior at the marketplace, and this also goes to say that there is pressure on the residential market while the commercial market, continues to, work well.
Okay. One of the also key highlights of the previous quarter has been that while we've seen almost a flattish growth when it comes to the domestic business, the exports, on the other hand, that has managed to keep the margins as well as the other segment volume growth even higher. Could you also help us understand how is business shaping up over there, and what is the total contribution of the exports to your overall revenues?
So exports is a large part of our business, and we've been the largest exporters from the country. We have over 30% market share, of the exports from India, and of the overall revenues, but 45% of revenues comes in from the international markets, and so that part of the market has done fairly well in quarter 2, and that's also because in quarter 1, we had some delays because of the new ERP implementation. So that kind of shifted to quarter 2. But by and large, the export markets are doing reasonably fine for us. And we export to nearly 100 countries worldwide. So across regions, we have exports. And again, there too, the market in general is not growing. You're probably ending up taking share from, competition. Yeah.
So in that case, Saurabh, do you expect the export market or the export business to outpace when it comes to growth over the domestic business? Do you see export business taking precedent over the domestic business? And if so, which are these geographies where you're managing to gain market share, or which are these geographies that should aid growth going forward?
So we have dedicated resources in terms of, manpower, capital, marketing focus on domestic and exports market. So, and both geographies, have different, slightly different product lines also. So really our attention is not an either or. The domestic is slow, then we increase focus on exports, or vice versa. So we have our own focus. We have complete focus in both the markets, and there are independent teams and network in both the markets. So really tough for me to say whether it'll take precedence, but I think they both will probably grow. There could be 1 or 2 quarters, where one grows a bit slowly and the other grows, a bit faster. But I think in a longer term, we'll have both the markets growing, But yes, 1 quarter or 1 year or 6 months, it's not strategy, but over a longer period, we expect both the businesses and both the geographies to grow for us.
Saurabh, also, we've seen a substantial enough improvement when it comes to the overall EBITDA margins for the company. And while we had seen a very small number in terms of EBITDA margins in the previous quarter, do you expect that given the adverse product mix, given the higher share of lower margin products to in your overall portfolio, you will still be able to do improve on margins going forward as well? Because in this quarter, we've seen your margins come in at a multi-quarter high of almost close to around 14%. Is this sort of a run rate expected going forward as well, or do you see it slowly or steadily come down once again before we see any meaningful improvement as far as your margins are concerned?
So if you see the margins actually have been largely flattish. The increase in margins is visible due to the new accounting standard, which is AS 116, and we've given that, disclosures where EBITDA has actually gone up because of some accounting adjustment, while the PAT has actually come down due to that, currently. So I think over a longer period of time, we will be able to maintain our margins and probably improve upon our margin as utilizations go up. Raw material costs have largely been stable, so I think that's also, helping margins to be maintained. So I think over a longer period, we should be able to maintain or improve our margins.
Okay, then. Well, in that case, Saurabh, before we let you go, could you also give us a guidance in terms of what could be your top line or your operational performance for the full year of FY20?
We don't like giving good guidances and probably doing bad at that, but just so we have talked about top line growth this year in the past also. Mm-hmm. So I think we've talked about like a 10% kind of a top line growth, and we think we should be able to maintain that. Yeah.
So you maintain 10% top line growth for full year of FY20?
Yeah, that's right.
Okay. Well, thank you so much, Saurabh. It's always nice speaking to you, and all the very best for the coming quarters as well.
Thank you so much.